Good afternoon. It's Jeffrey Christian. It's not quite 2:30 here in the afternoon in New York on Tuesday, the 10th of December. I want to talk about spot silver and silver medallion pricing, and then also market update. I'll also talk a little bit about China uh, and some of the Chinese economic policies and what they may mean for precious metals, because we've seen right now today, late yesterday and today, silver prices and gold prices have been rising. Gold's around $12,715 right now. Silver is around $32.60, I think, 64 cents. It has gotten up to almost $32.80 earlier today. And I think part of that reflects uh, market expectations that what's going on in China could lead to stronger markets and possibly some inflationary pressures on a global basis. But I primarily want to talk about silver bullions and medallion pricing because that's come up in the market. And then I'll end talking a little bit about our ultra short term and our short term views on the market. Before I jump into the silver medallion story, let's just talk about China. China is a communist country. It has a managed economy. It used to have a centrally planned economy. It's starting in the mid to late 1970s. It modified the way it runs its economy from being centrally planned to being centrally managed. The government has a tremendous amount of power, and it also has a tremendous amount of resources. In 2008, during the Great Recession and the global financial crisis, China was able to roll out a multi-trillion-dollar jobs program, infrastructure build program to help the Chinese economy weather the global financial crisis. The United States, which has a, let's say, I was going to say democratic, but maybe I should say dysfunctional government, came up with the same size of infrastructure program, jobs program, but allocated only about 10%, 20% of it over several years. China, the day that legislation was agreed upon, started ordering steel rails and copper wiring and aluminum poles and rails and cement for construction of highways and railroads and other projects to put people back to work. That's what China is doing now. China has been wrestling with the global lockdown, the zero COVID program, economic weaknesses, worsening international political, economic, and trade relations, which have caused problems, overinflated real estate issues. They've had a lot of economic issues. The Chinese government has been working very hard with a lot of resources available to it to stave off those problems. And this week it is announcing that it's going to get even more assertive in trying to rebuild the Chinese economy. And it has the resources to do that. People's Bank of China has more than $3 trillion, mostly in dollars, that it can spend in building out the country. The China Investment Corp, the sovereign wealth fund, has at least $500 billion that it can invest in companies and development programs and housing and other assets within China. It has the capacity to do that. And I think the markets realize that. So let's go to silver bullion and medallions. We're seeing a wave of online silver commentaries about how investors are finding it difficult to sell at what they consider decent prices silver medallions. These are not official coins. These are rounds and other shapes that are made by private mints or refineries that are not necessarily recognized as equivalent to official coins or bars manufactured by internationally recognized refineries. And we've seen this and we've warned about this. There's a whole thing where you're finding 10-ounce bars and other bars that are labeled as LBMA recognized bars. They may be bars that were manufactured by a refinery that is recognized as a good delivery refinery at the LBMA. But the LBMA recognizes 400-ounce bars, not 10-ounce gold bars. So for gold, 1,000-ounce bars for silver, not 10-ounce or 100-ounce silver bars. So you've seen a lot of stuff that investors have bought, and it's cheaper than an official coin, or it's cheaper than a bar that is recognized as an internationally acceptable bar. And there were a lot of people buying these in 2020, 2021, and continuing. And we were warning people about that when you have a lot of investors, including new investors, who are not familiar with how to trade gold and silver, and they're buying, the premia on everything, including these medallions, will rise. But when it comes time that the investors as a group start selling large amounts, that those premia disappear and actually often turn into discounts. And that's what's been happening for the better part of this year, really probably since the second quarter, although since the silver price spiked up in the last few months, and people start thinking, I can get $30, $32, $33 an ounce for my silver, you've seen an increase in sales by investors of some of this stuff. And they're getting dissatisfied because there are dealers who will pay them a discounted price, discounted to spot, for these kinds of medallions, or they'll not even buy them. They'll say, I'll buy your official coins, I'll buy your internationally recognized bars, but I'm not going to buy these medallions and other things. And some investors are surprised. They shouldn't have been. Here's a link to one YouTube commentary from a week or two ago exactly about this. Now, no one should be surprised. We warned about this, and we wrote about it, and we spoke about it. We did one of these YouTube videos in 2022 during the great Wall Street silver scam. We said, watch out. When it comes time to sell, there's going to be a lot of other people who say it's time to sell, and you will suffer a discount on these materials. And we got a lot of opprobrium from true believers who said that we were perma bears and didn't know who we were or what we've said about silver over the last 22 years since we issued a buy recommendation. Duh. And snake oil salesmen, the people who are promoting this and other nonsensical things about central bank digital currencies are going to steal away your freedom and then your wealth. And BRICS are coming out with a gold-backed currency, which they're not, and all kinds of other things to try to scare people into buying metal. This is a link to our 2022 warning video. Hey, watch out. When it comes time that everybody's selling, these things will have discounts. Now, here's the bid and ask of 1-ounce silver bullion rounds compared to spot prices. We got this off of the wholesale price list that Fidelity Trade prints twice a day for its wholesale dealers. And in May of 2021, you could see that a 1-ounce round was going for $1.12. If you wanted to buy it, it was $4 over spot prices. If you wanted to sell it one back to them, they would pay you $1.12 or 4.3% more than the spot silver price at the time. So kind of looked attractive compared to the premium that you were paying for Eagles or Maple Leafs or other products. Fast forward to today, the spot price, if you're a seller, is $31.76. If you're a buyer, it's $31.88. And if you want to sell your round, you're going to get an 11-cent discount, which is 0.3%. That's actually not very bad. Although I've heard these are wholesale discounts. The retail discounts if you could find a retailer to buy them, are much larger. And then if you want to buy them, yeah, you're going to pay 118 over spot because there's a lot of stuff there already. So a 4% premium marked down from 15%. That's the reality of buying these things that are not as readily recognized as bullion investment products. It's the way it is. Talking about where the markets are right now, gold prices, as I said, they've shot up today over 2,700. Well, they broke above 2,700, I think, yesterday. I tend to look at the February active February COMEX gold contract, nearby active. So I'm looking at February prices, and they're, like I said, 27.16 right now. They've risen back. I think we're starting to see a resumption of increased concerns about risks on the part of investors. We went through this post-election period of a reduction of uncertainties and risks and fear of uncertainties, and now I think we're starting to see heightened risks. You also have seen tightening sanctions on Gazprom Bank and other Russian entities, which has caused severe financial constraints within Russia. The fall of the al-Assad regime in Syria is heightening the internal political tensions within Russia. And you have other factors going on too, including the revelation yesterday that Elon Musk was talking to Putin, and Putin in 2022, when Putin asked Musk to turn off his satellites over the Ukraine so the US and the UK couldn't provide the Ukrainian government intelligence from satellite views, and the Ukrainian government couldn't tap in. Putin also asked, and Musk apparently agreed to, turn off the satellites over Taiwan. Putin's asked as a favor for China, which is kind of not good in terms of somebody who's supposed to have access to state secrets in the United States next month. So there's an increase in tensions, there's an increase in uncertainties, there's concern. And we think that that is partly behind the increase in gold prices over the last 2 days. And we think that gold prices may have some further strengthening into the end of this year and into January as well. Very similar dynamics in silver. Silver has been a little bit more muted than gold until yesterday, and silver prices have spiked higher. Gold has an active February contract on the COMEX. Silver's next active contract is in March. So you have a little bit more time there before you see any increased pressures from the futures market on upward pressures on the price. So we've seen those prices rise on a short-term basis. We had issued a buy recommendations on gold and silver previously in our ultra short-term trade recommendations. Yesterday, the upside target on our previous silver trade recommendation was met. So we issued a reiteration that we would stay long or be buyers at yesterday's price on an ultra short-term basis because we thought the silver price would rise further. We are in a situation today where we have our upside target had been 2,700 for gold. We've reached that. We've exceeded it. So we've issued a trade recommendation this afternoon on an ultra short-term basis saying that we would stay long or buy here in the expectation that over the next few weeks, the gold price could rise further. So again, our views of gold and silver prices pretty much unchanged from where they've been in terms of an ultra short-term and short-term basis. We think that both of them will stay strong and move higher, at least in the first couple months of next year. Beyond February, you might start seeing some softening in gold and silver prices, but we think that given all of the economic and political problems we expect the world to be confronted with next year, that the gold and silver prices will stay high and probably move to even higher levels. That's all I have for now. Take care of yourself, take care of those around you, try to do something good for the world, pick up a good book and read it. And we'll talk to you at the end of this week.